Welcome back to the channel, everyone. Today I want to talk about how AMC is on track for a November squeeze. I don't really usually like giving time deadlines, but I thought this one was too good not to share. So stay tuned and let's make some money. Now you may have already seen this video uploaded by Vin Wall Street. What you can see here is the June to present day fractal and also the March to June fractal as well, or effectively cycle 2 being overlaid on top of cycle 1. And as you can see, they match pretty much perfectly. I think this is really important because it basically combines Astro's fractal theory with the cycle theory that's also going around as well and gives them both the same time deadline. Especially as AMC is now starting to curl back upwards, it looks like we may see a small imminent high around $60 before a pull backwards and then blasting past our previous all-time highs at $72 to $77. Now, John also posted something very similar, saying I don't know if I posted this here at the time, but here's me considering the March arc being June at the beginning of this month in a private Discord that I'm part of. As you can see, he's overlaid the March curve on top of the June curve. In this scenario, then we hit that high at the end of November. Now the March to June curve again is obviously in blue and the current June to present day curve is obviously in red and green. Obviously this was done at the end of last month, but so far we've tracked upwards up here perfectly. I do feel that there's something different in the air recently. It seems that there's been more FUD campaigns coming back while the volume has continued to dry out. More and more apes have also been DRSing their shares and something to me just feels like we're kind of in that May period again, ready for the next run up. Now, something I did want to warn you of is over the next few days, we're likely to see more reports like this from the mainstream media. GameStop and AMC rise, the SEC report debunks meme stock conspiracy ideas. They say the SEC report put the kibosh on meme stock conspiracy theories circulating on the internet, but it also said its market dynamics should be investigated. I would just say be aware of these articles and obviously know that they're from the mainstream media and they are going to be FUD and they are meant to scare you out of holding your AMC and GameStop positions any longer. Some people have actually been reading more in depth into the SEC report and believe that the SEC is setting out the next steps for the AMC squeeze. The SEC obviously said that when dark pool volume decreased, GameStop and AMC ran up in January, and therefore the SEC are also saying that they're going to investigate dark pool volume as they currently think it's too high and should be lowered. I personally don't think it's worth reading too deep into this report, because at the end of the day, with this report, what will be. It wasn't really what I'd hoped for with the GameStop report, but I guess like the SEC did their best. I suppose to some extent the SEC and Gary Gensler couldn't really have exposed all of the fraud going on, as Wired puts it perfectly. What would have happened if the SEC and Gary Gensler factually stated that Citadel and Virtue were deeply over-leveraged with naked shorts? The rest of the market would pile in and we would have a market disruption event. At the end of the day, Vanguard and BlackRock would allocate like 20% of their entire portfolio, buy AMC, squeeze Citadel, and then we'd have a giant market disruption event because Citadel would be liquidated and they'd have to dump all of their long positions. That would absolutely cause a market crash, and remember, right now, Rule 803 and 010 aren't yet in place, and therefore if the market does crash, the SEC can't yet do anything. That ruling, where those long positions can be lent to the DTCC, isn't yet actually in effect. Now currently, most people don't have a lot of confidence in the stock market. These big institutions and market makers get all of these exemptions, there's a lack of reporting, and it basically seems like all of the normal rules and regulations that apply to regular people like you and I just don't apply to them. But when investing in cryptocurrency like Bitcoin, Ethereum, and many others, it's much more of an even playing field. So I personally use BlockFi to invest in cryptocurrency. And not only can you just invest in cryptocurrency and buy some Bitcoin, but you can also earn interest on your deposits of up to 8.25% per year. BlockFi also offer a rewards credit card with an introductory rate of 3.5% cashback on your purchases paid in crypto. There's also no annual fees, but unfortunately the credit card is only available in the US at the moment, not in the UK. And when you've generated a large profit on your investment, Instead of selling off your Bitcoin and your Ethereum and potentially missing the next run up, you could take out a crypto-backed loan with BlockFi if you needed to do something like buy yourself a new car or pay off some bills, as they've got ultra low interest rates as low as 4.5%. So be sure to sign up to BlockFi using my link down in the description below to get yourself up to $250 in free Bitcoin just for signing up to BlockFi and making your first deposit of over $100. I've also seen a lot of renewed arguments between GameStop apes and AMC apes. As I've always said, I think we're fighting the same fight, we're fighting the same battle, and ape should not fight ape. Apes should be strung together and fight against the hedge funds and the institutions. We shouldn't be fighting amongst each other because AMC and GameStop are the same play. And as Jackson says, institutional short sellers on AMC and GameStop are practically the same. The top 5 shows an 80% overlap. Therefore, if GameStop eradicates the shorts and bankrupts the shorts, it will follow over to AMC. And at the same time, if AMC eradicates and bankrupts those shorts, it will also follow over to GameStop as well. Basically, if one of those stocks squeezes, causing hedge funds to be liquidated, they have to cover all of their short positions, not just their short position in GameStop, but also in AMC as well, or vice versa, not just in AMC, but in GameStop as well, and therefore the other stock will also squeeze. As you can see, the biggest short sellers in AMC are Simplex, Susquehanna, Jane Street, Citadel, and 683 Capital Management. In GameStop, we've also got Susquehanna, we've also got Simplex, we've also got Citadel, we've also got Jane Street, but we also now have Group 1 trading as well. Now, if you didn't know, Adam Aron was on another interview today. During that interview, he said that AMC could become a successful issuer of cryptocurrency. And as Bob Weaver says, this is huge. Mother of all short squeezes is inevitable. For months now, I've been saying that AMC should issue a crypto dividend, or potentially, because they currently have a loss reserve at the moment, should just distribute some crypto or some NFTs to all of the shareholders for each individual share that is owned. This would be a brilliant way to expose the float and expose the amount of naked shorts, because you could very easily see that AMC wallet paying out all of this cryptocurrency, and you could track how much they're paying out. And it seems like Adam Aron is hearing the apes loud and clear, as he now thinks that AMC could become a successful issuer of cryptocurrency. Now, I also wanted to talk about why Citadel is so worried about the negative campaign, or the truthful campaign, against them. As Joshua says, due to the current lawsuit, because obviously Citadel and Robinhood are currently involved in that lawsuit that I've gone through in one of my previous videos, clients of Citadel can now close positions or withdraw funds from Citadel without penalty. And therefore it now all makes sense as to why they had a meltdown on Twitter. True Demon says this happened to Michael Burry during his lawsuit over his derivative bets against the mortgage bonds with Deutsche Bank, Goldman, BofA and others back from the film The Big Short. He supposedly had to freeze his client's assets and was pressured with multiple lawsuits in order to force him to allow withdrawals. In the film The Big Short, he composes an email to his clients saying that because he suspects the entire market to be fraudulent, he's frozen client withdrawals. He then obviously gets about 10,000 pings of emails flying through, all trying to sue him over his freezing. And I assume this is why they've issued another cease and desist letter to Cat Striker, and why Citadel may just be about to go on another Twitter meltdown. Cat tweeted saying, "Breaking news. This is the 4th cease and desist letter. It looks like Ken Griffin doesn't want the news spread. He sent this letter to 28 different companies. Letters were sent to companies that don't even do business anymore. Guess what? I won't back down." The letter says our firm is a defamation counsel to Citadel Securities and its founder, Ken Griffin. It is our understanding that a woman named Catherine Larson, who uses the Twitter handle Cat Striker, has contracted with a New York City mobile advertising company to run a series of billboard advertisements in the city. She has published a series of tweets containing pictures of those ads, which contain demonstrably false and defamatory statements about Mr. Griffin, including the inflammatory and outrageous claim that he perjured himself by lying under oath. It says we write to put all companies that offer mobile billboard services in New York on notice that further engagement with Miss Larson will expose you and your company to substantial legal liability. Clearly, Ken Griffin is still not happy with all of the planes that have been flying around the Citadel and the SEC headquarters, and now he's also not happy about the mobile billboard adverts that have been there as well. I'm hoping for another typical Citadel or Ken Griffin meltdown all over Twitter, and I can't wait to see what the next one brings. Now finally, I wanted to touch on some wider market updates, and we now know that the Chinese developer Sinic has actually defaulted as the Evergrande deadline looms. Sinic Holdings has added to a growing list of defaults across China's contracting real estate sector as markets are braced for a deadline this weekend for developer Evergrande to settle interest payments on its offshore bonds. Sinic defaulted on a $246 million bond that was due to mature on Monday, in line with a warning last week, and adding to the $206 million default from luxury developer Fantasia. And the reason why this is going to have such a prevalent effect across China and across the entire world is because of this next paragraph. Borrowing costs on Asia's bond market for riskier corporate issuers soared in the weeks after Evergrande. And therefore, for any property developers that are struggling a little bit in China, aka most of them, it's now become even more expensive for them to borrow money because they're now seen as being more risky, and therefore makes them even more likely to default because they can't refinance their existing bonds and loans. Evergrande's initial failure to pay interest on its dollar-denominated debt on September 23rd, on which it has yet to make any public announcement, triggered a 30-day grace period that ends on Saturday and could result in a formal default. Interestingly, China's central bank thinks that the spillover to the financial system was controllable, although so far it doesn't really seem to be that controllable, especially because the key Evergrande deal to sell off a large part of their business has just been put on hold. The deal to sell 51% of its property services unit has been put on hold. This is why the Evergrande stock has been frozen over the last week or two, and I guess it's now going to be unfrozen if the deal has been put on hold. However, the deal has been put on hold as it's yet to win blessings from the provincial government, which is overseeing Evergrande's restructuring. It's not immediately clear why the provincial government has not approved the transaction. Some offshore creditors of Evergrande also oppose the deal. And that's because Evergrande, which has $300 billion, $300 billion US dollars in debt, was trying to sell off 51% of its property services unit for only $2.6 billion US dollars. Guys, be sure to let me know down in the comments below what you think about AMC's current run-up and whether you think we could see the squeeze before Christmas, potentially at the end of November. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.